Go.
Streaming from South Africa to the world. This is the Stonks Go Moon Podcast. What just happened? We break it down so you don't have to.
Welcome everyone to the Stonks Go Moon Podcast. SAFTs are out, streaming equity is in, the SEC is knocking, DAOs are raising, and 1 billion in tokenized equity is already flowing through Fairmint's rails on Ethereum. But how do you actually put a cap table on chain without going to jail? Our guest today helped write the code that did it. Joris Delanoue is the co-founder of Fairmint and the builder behind the Open Cap Table protocol, a new standard for legally compliant on-chain fundraising. If Web3 wants to grow up, this is the infrastructure it needs. Ladies and gentlemen, my guest today, Joris Delanoue, co-founder of Fairmint. Welcome to the pod.
Hey, hi guys. Very excited to be here. Thanks for having us today, Rocco.
So, open courts on the table. This is something I do not know a lot about, but this is the point of the podcast. If I learn, so does my community and the listeners learn. I think this is the first time in 298 episodes that we are talking about fundraising. And essentially what you did is taking an old model, right, for crypto, which is SAFT, stands for Simple Agreement for Future Tokens. And you said, okay, we don't want to do that anymore. And you said, I'm going to build something new. So my first question is, what exactly is, when I say SAFT, what is it?
The safety you said?
Yeah, Simple Agreement for Future Tokens.
Okay, so this is not what we do at Fairmint, to be honest.
No. I said, but that used to be sort of.
Yeah. So the way the safety was created initially was some lawyers decided to try and to find a way that would be as expedite to do fundraising as the safe, but without being a security. That's how they did the stuff. But today that model started to be a bit vintage. Mm-hmm. And we started to see more a combo of traditional safe plus token warrant. And so today that's the most used in the fundraising process, where basically the investors are purchasing a safe note, so same old way that they would do for any Web2 businesses. But at the same time, they would also sign a token warrant and purchase that with, it can be $50, $500, depending on the purchase price that the company set up for that. And in that case, they are entitled to a fraction of the tokens whenever the company would issue a token, whether it's tomorrow or in 5 years. And the idea is really like to make sure that any value that would be created by this entity or this team or this network, those investors that invested in equity, they would be exposed to that value as well through the token warrant. And so today, most of the fundraising are not done anymore with safety, but more with safe plus token warrant as a combo.
So that's what you call streaming equity. Is that right?
Yeah. So if we look at the last 10 years of crypto, we started to see with the ICOs, a lot of people trying to pool some of their investment to do something big, right?
Yeah.
It went well for some, it went less well for some others, or many others.
Most of them.
And the funny part is that a lot were trying to reinvent capital formation for crypto. And the reality is that now when we chat with a lot of the project, many times they are like, oh, maybe what was done for Delaware C Corp, for example, or C Corp in general, was actually robust enough. How can we leverage that so that we can bring the crypto on top of that, rather than to try to replace that? We just keep the same investor protection, the same model as we all know them in the equity for years and decades. But we bring the token component to that. That's where the token warrant is so useful. And I would even say this, the models that existed 7 years ago with like going fully offshore, which was a bit the model of DYDX, for example. Like everything happens offshore, nothing is in the US, nothing is a security in the US. That was a model that lived during several years. And then we had a model that was more like the WorldCoin type of model, which was we have a Delaware C Corp. This entity has officers, they do development and all. But this entity also work for a foundation or multiple foundations that are offshore. And those foundations will be the one issuing and distributing the tokens. So that has been a model that a lot of people were trying to push for the last 4 years. And the funny part is that now that we see the change of mindset in the SEC, the new administration in the US, we start to see a lot of the people trying to bring back everything onshore. And that's how we started to see Miles Jennings from A16Z pushing, stuff to bring new entities in the US. And I think it's very interesting. What is fantastic with equity is that you can always rely on this. Why? The investor protection, I mentioned it, but also everyone knows what is a good agreement in the equity world, whether it's a convertible note like a SAFE or a purchase agreement for shares. It's pretty clear. What needs to be done, it's more flexibility or a very clear path to access to the token that would exist one day in the network. And I think we are at this moment where precisely we'll see a big shift on this part where we bring back the things on the US soil.
Okay, but you talked about this administration, but I also know that you've been building for the past 7 years. So was this something that you foresaw? Was this something that you were working on and the time was you were just waiting for the time to be right? What exactly was it?
Yeah, so you point to something that is very interesting in our journey, because yes, it will be soon 7 years that my co-founder and I decided to team up to build better rails for the equity securities world, and crypto or blockchain in general is really the rails that we imagine was the best for that. And many times when you have a vision, often you fail trying to build this vision.
Absolutely.
Then something happened, the market, the industry, everything converged, and you are there like staring at that, thinking like, oh, I was doing that 5 years ago, and you are very frustrated because you had the feeling that you were not understood. I think what is very important is to always find ways to last long enough for a groundbreaking movement to happen, and this type of movement to the blockchain for the entire financial world is happening just now. Stablecoin is finally the success for RWAs. What is the next one? Probably equity security will be part of that. And yes, during 7 years, we had to iterate, talk to many people or try to talk to many people. And many times the doors were completely closed, or, lawyers were like, no, that's not the time for that. VCs were like, yeah, it's coming, but no, it's not now. We had a lot of institutionals that were like just asking us, oh, are you doing that on the blockchain? But why? Like, oh, you are too crypto guys for us. And what was very funny is that when we were going to the crypto people, they were like, oh my God, you have KYC, KYB, AML. Oh, you are too regulated for us. So no one wanted to really interact with us. The funny part is that over the last 4 or 5 months, it's a complete flip. And I'm very happy that we managed our cash and all the fundraising, and we got the support of our community to last long enough to finally serve this big wave that we knew was coming, because it is now. And what's fantastic in that is those same guys, they are now not anymore scared of any reputational risk to talk to us. Before they were scared of, being subpoenaed by the SEC on whatever they would do on chain. Now they are literally rushing because they want to be the first and they don't want to be the last. And we see a massive inflow of call requests to connect from all those guys. And I think there is a big bet now for both the Wall Street institutional and the ecosystem on chain to say, okay, how can we bring these assets on our ecosystem?
Yeah, you talk about these guys. So without naming names, I don't want to put you on the spot. But what sectors or what industries are we talking about? Who are the big players that want to come to the table?
Well, large ecosystem. So if you think in the blockchain, of course, any chain that is today a bit trendy, whether it's on the Solana side, Base, Avalanche, like all the big chain, including any EVM on Ethereum, are today very interested in bringing that. We start to see also completely new chain, or rather than new, like I would say less known, but very known in the Wall Street era, where I'm thinking, for example, of Kenton, which is a chain that already has multiple of institutionals that are connected to it, including JP Morgan, BNY Mellon, like these big names of Wall Street, supporting them for a long time. And I think more and more we'll start to see very specialized chain in fintech trying to bring their own strengths to the market of equity securities. We start seeing them calling us saying, hey, can we do something? Are you able to bring your smart contract to our ecosystem? If so, we can offer you to connect with this and this and these people. And on the other end, we start to see those big banks saying, oh my God, or those big broker dealers with large pool of investors thinking like, how can I bring those assets to my portfolio so that rather than to be traded on the next NASDAQ, you will go after a very cool company that won't IPO, but they will be on my platform, even maybe with exclusivity on my platform, you see? And what's very funny is that we are building the equivalent of APIs through the blockchain smart contract so that those guys can tap into the capitals of companies and the asset of companies that are now going on chain.
What's your background? Do you have any coding experience, or where does this all come from?
Well, very funny that you asked me that. I'm not from the financial world, but when I was very young, around 14, 15, I started to have an investment club. And I remember that my economic teacher at that time was pushing me more and more to trade and do things. And actually it was the moment where I started to be really passionate by the trading and all the things. And I wanted to be a trader when I was younger. Then I did a business school. I completed that with an engineering school in France. And I've been an entrepreneur since more than 15 years, with two different exits in Europe. The reality also was that I was frustrated to see how I was managing my cap table, and it was very hard to onboard people easily to my cap table. Either it was expensive or unclear, people were not educated I invest this and you receive 10x what you invest. I mean, it was weird, to be honest, in 2008, 7, in France to grant equity to your team, which is the norm in the US for a long time.
Yes.
And that created a lot of frustration. At the same time, I was also starting to angel invest. And I was also very frustrated after 2, 3, 4 years to see how illiquid all my assets were. And in 2017, after I sold and had everything settled with my previous businesses, I was like, what do I do now? And I was constantly thinking capitalism became very inefficient. There is less and less companies going public, more and more staying private longer and longer. How can we fix the need for liquidity of this market? And I started by building an exchange for startups using SPVs. So the idea was like, okay, we don't mess with the cap table of a company, but we bring SPV to the company. And in the SPV, we allow movement, but that doesn't impact the cap table of the company itself. And that's when I reconnected with my co-founder, Thibaut. He was deep on chain at that time. And he explained to me the ledger. And I was like, oh my God, that's the rail this industry needs. How can we offer that? And it's very funny because my previous business before that was on the cloud computing. Wow. And I had this haha moment, I was like, 2008, oh my God, cloud will be so big. It will completely shift the IT infrastructure. I want to do that. And 10 years after, got explained the blockchain while working on those financial things. Mm-hmm. And same feeling. This is groundbreaking. It will change completely the way people interact with those financial world. It was pretty obvious. That's what unlocked us to say, okay, let's do that.
Such an interesting story. What, maybe on a personal note, why didn't you stay in France? Why was this not something that you could do remotely? Why the move to the US? Why did you feel as a new startup founder you had to be there?
Well, I think I was meant to be in the US for a long time. That's what my wife would say. But on my end, my idea was more like, if you want to fix capitalism, you want to be where capitalism is. Exactly. And I remember applying to the Singularity University and their exponential program where, you're if you want to join, you are supposed to work on anything that would impact more than 1 billion people over the world. Yeah. And so a lot of people are applying, to fix food supply, energy supply, water supply, or work on microbiome and things like this. And me, I was like, no, I just want to fix capitalism, which impacts as many people as possible over the world. By one, democratizing access to financial upside, and two, educate more the people to their own financial access. And I think it was very important to be in the US to do that, because even if it was extremely hard, learning all the securities laws, those laws became our own specification. So we went so deep in the detail of this that today we are able to build the tech that answer this market, and we feel it that this is the data point the rest of the world is following. Even if a lot of other area are trying to do their own exemptions and their own rules, the reality is that when the SEC said the things, a lot of the other players around the world are following this position. And if not, it's just a matter of time before that the SEC flips the script and you see all the players trying to come back here, which is, I think, what's happening a bit now.
So thank you so much for joining me today. The last question before I let you leave: if we theoretically say that the whole startup ecosystem or capitalism is entirely moving on chain, what does that mean for the roles of people like lawyers and VCs and even founders going forward?
Yeah, that's very interesting. So for the founders, I think it means that their assets are more valuable than before. Because you can imagine this way. Before you had papers. So you had to go through multiple people to print the paper, sign the paper, give the paper. Then came the digital era. It was PDF. Okay, but still, the digital share were owned by a vendor in his own walled garden. The beauty of what we've been building on chain is precisely the fact that now, as an investor and as a founder, you can hold your stuff directly in your own wallet. And then you can very easily connect that to the world of DeFi, the decentralized finance, managed by a regulated agent. But still, it's DeFi, and it opens so much perspective, so much potentiality. That's what we call composability, in our ecosystem. The things that literally help your illiquid asset to connect with multiple possibilities of the DeFi stack. And lawyers, of course, because I mentioned it, it's a regulated DeFi, are still meant to be here. But I think the new position for lawyers will be more like helping people like me build the most robust system and protocols, rather than just being there to, transmit templates, legal, that they don't bring a lot of value to. Right now, lawyers will be a complete component of the product itself or the protocol itself.
Do they need to upskill themselves, or is it just a transfer of knowledge?
I think it would be both, okay? Because of course you need to work a bit differently when you de-intermediate so much. Today, if you are a bit conservative, you know that when you want to IPO, for example, after being private for years, you will spend a lot of money because you have to pay all the people, that will be there, the investment bankers, the nominee, the national exchanges that will then trade your stuff, the broker dealers that will promote that, and all that connected to the good old DTCC, and the custodian, of course. So at the end, all those guys have their own set of legal fees, set of admin fees, operational costs, and you can cut like 90% of that by going on chain, literally. You can have instant settlement.
I love it.
You can offer so much. And that's the beauty of this composability with DeFi, because, what was very static in a form of a spreadsheet that were going on multiple ends to justify that, there is clearing and depository and all. Now it's just like smart contract on the blockchain. You see?
And lastly, VCs, I'm guessing it's going to make their life easier.
Yeah. Because if we think 1 minute on how complex it is for a VC that is closing a fund to keep active position, like completely illiquid. Well, what do they have to do? They have to find tender offer. They have to drop it to another fund where the partner might be the same name to make it easy, or they will have to sell it with a huge discount, which is like a lot of the capital that are stuck today in those private companies. We need to offer them better rails for that. And there is a lot of what I call the tier 2 companies, like they do hundreds of millions of revenue. They are very good businesses, but they are not following the metrics required to go public. Well, those companies, they deserve to have their own chance with DeFi so that more people can access to their capital without falling into the public stuff, and offering the early supporter, investors, VCs, a pass to a better liquidity. And like I keep saying to everyone, we don't fix liquidity. We fix the infrastructure that prevent any liquidity event to happen.
Fixing capitalism. I love it. Mr. Delanoue, thank you so much for joining me today. If the listeners want to go and connect with you or Fairmint and get involved or find out more about what it is that you guys do, where can they do that?
Well, so they can, of course, go on fairmint.com. They can also contact me by email, joris@fairmint.com. And of course, if they want to read more, we have a lot of available in our press section, where we keep talking about all the milestone that we achieve and all the new features that we offer to the market.
I love it. I'm going to put all the links here somewhere above where you can't see it. Thank you so much for joining me today. And to our listeners, peace, love, and prosperity. Okay, to the next one. Cheers.
Can you feel it rising? Like the sun was shining. Let it pull you higher. We're caught up in desire. Feel the light, feel it taking over. We're alive in this endless summer. Lift me up where the love runs free. In a beat that we can just be. Feel the light, don't look behind. We were made for this moment in time. Shadows fade, we break the spell. Echoes in the carousel. Dance words written on your face. Can you feel it rising, like the sun was shining? Let it pull you higher, we're caught up in desire. Feel the light, feel it taking over. We're alive in this endless summer. Lift me up where the love runs free. In our beat that we can just be. Feel the light, don't look behind. We were made for this moment in time. Oh, oh, we're flying. Oh, oh, no denying. Oh, oh, this love is real. Oh, oh, just let it heal. Feel the light, don't look behind. We were made for this moment in time. Lift me up with love alive. And you were made for this moment in time. Can you feel it rising, like the sun was shining? Let it pull you higher, we're caught up in desire. Feel the light, feel it taking over. We're alive in this endless summer. Lift me up where the love runs free. In our beat that we can just be. Feel the light, don't look behind. We were made for this moment in time. Oh, we're flying. Oh, no denying. Oh, this love is real. Oh, just let it heal.